Hello, FinTech members. Welcome to your weekend report. I hope you're doing well. Starting with S&P 500, another all-time high on Wednesday. Again, the same narrative. Any market that's pushing all-time highs, you really have to just be in position and ride that trend. Even though there isn't a lot that's healthy about this market, I think about half of this move is attributed to 10 stocks in the S&P 500. So it's becoming very, very much concentrated on fewer and fewer names. There's quite a few 52-week lows in the S&P 500 as well. But we've seen that also in the past where there's a concentration, breadth doesn't look too good, and then there's a rotation, other sectors pick up, take up the slack, and then it continues higher. The other main observation I want to make is that from a cycle standpoint, we're in this outlier environment where the weekly cycle is now 29 weeks of pretty much up only. So that's a full-blown outlier weekly cycle. And therefore, predicting a top is a futile effort. Once it goes beyond that sort of 20 weeks for a high, and now you're getting to 30 weeks, nothing stops it from going to 36 weeks or 40 weeks, or when we're done with this, looking as if it's actually two cycles. So if you put two cycles together, and you go 24 weeks and then another sort of 15 weeks to a high, in the end, this may be one straight move up until the end of the year, and then you get a peak, and then when you look at the next weekly cycle low, let's say in March, then the ground covered from April will be the equivalent of two weekly cycles. We could be in that type of environment, just a melt up, keep on going kind of environment. Again, there is nothing here from a cycle standpoint that is all that predictive, except for the cycle is in an outlier in a bullish sense, and therefore I'm not going to try and step aside and be afraid that at any moment it's going to drop. And I guess at any moment it could drop, but that has been, again, the narrative for the last 10 to 15 weeks, that a weekly cycle is due, a decline, it hasn't come, and it keeps on pushing higher. I mean, earnings are still strong. A lot of capex spending. Fed is sort of trying to lower rates as well. So that's still driving the market. And this type of market, this outlier environment, what's eventually going to happen, whether it's next week or next month or end of the year, there's going to be some news, some sound bites, and it'll drop the market. And then that will break the trend. And then it'll be sort of a 4-6 week sort of panic environment, give up a lot of these gains. It'll happen in a relatively short period of time. The problem again is, when does that happen and why? We don't know. I mean, we're in a government shutdown now going on over a month, and that has had almost no effect, or it has had no effect on this market. So it just wants to keep on going, and while it's doing that, we just have to respect it and stay in that position and keep on riding this market higher. On the monthly, we just closed out the monthly candle. Pretty much another solid green candle. You'll notice there's 6 green candles. We don't get many 6 or 7 or 8 green candle environments on a monthly time frame. But this again just shows you that it has a lot of energy built in from the crash, the bear market, sort of 1 month, 2 month crash that we saw in April. That's driving the slingshot effect, especially once it broke through all-time highs in June. And now I think we're in that final phase of this move, not necessarily the final phase of the 4-year cycle, but I think, again, going back to the weekly, this outlier environment, we're in that final phase, which could last another 4 or 8 weeks, maybe even a little bit longer, which leads me to believe that we may finish out the year really strong, maybe get some weakness around the late December timeframe. But in general, you can't bet against a market like this when it is just doing well, pushing highs, when some of the narratives aren't so bullish, right? Debt and slowdown and so on. There are narratives there that, and the shutdown, that don't necessarily warrant this type of behavior. And when you see this type of behavior, when there are narratives out there that are bearish or could be bearish, then that's a positive sign. So looking at this, sentiment also has cooled off quite a bit here, still elevated, but not at extremes. So there's room for even more for this to grow, sentiment to grow back and get really excited as we get like a blow off kind of move. That is typically what you see at this point in the 4-year cycle. Again, except for that April drop, it really has been up only this entire move from the October 2022 lows. I think we're getting into sort of that final stretch of that 4-year cycle. Looking at indicators here, yeah, we're getting kind of elevated across the board, but that, of course, can remain elevated for a long period of time. What I'm looking for more in anything else is sort of an extension above that 10-month moving average. As you can see, starting to really pull away from that. Top of a channel right here, a loosely drawn channel, as another close to a 10% move. So I think there's plenty of sort of euphoric upside left, but I also think we're now starting to approach an area where the 4-year cycle could be looking to peak out. But I still think there's a possibility that this just surprises and continues to surprise for a couple more months. And then, you know, what you may get eventually is once this sort of peaks out, let's just say December, we finally get that shakeout into the weekly cycle low, and then one more attempt up, maybe a final shot up into, say, February, March, peak in the 4-year cycle, and then a little cyclical bear market to unfold. That's typically how it'll play out, but again, on the daily and the weekly, no real clarity from a cycle standpoint, only to say that this is an outlier environment that's gone the up only sort of side, and we want to remain positioned for that and see what else we can get out of this market. Looking at precious metals, good little bounce this week right here, but again, I think the damage is done. We are looking for a daily cycle low now. We're well and truly extended on this. This also, from a cycle count perspective, is like starting to get a little bit mixed up because we shot out and just went straight up only in one cycle. That's a bit of a concern because it looks more like a slightly left translated weekly, as you can see right here, up only for 9 straight weeks to what I think is a peak. Now, we're still above a rising 10-week moving average. So, you know, any price action above a rising 10-week moving average, I generally consider to be bullish. But the difference here is this was a bit of a blow-off, quite a bit of a blow-off move, more so than what we saw in April. And I just think that needs to cool off. I don't think that's necessarily bearish at all for the monthly or the long-term trend, but we just covered a lot of ground in a very short period of time, and I think it needs to reset here. Look at the monthly for gold. You'll see that looks like a big topping candle. You look at this extension from the 10-month moving average all the way up here. Massive, massive move. Pretty much one of the biggest price moves above that moving average that you will see in its history. So that looks like a blow-off move to me. But I don't think from a bull market perspective, timing-wise, that this is over. But this is a big extension, and that worries me a little bit. But you know, so that's why we rein in sort of leverage, any sort of futures positions that you have, options and so on. Now is not the time to be betting on that. But I still believe that this bull market has a ways to go, and it's just going to need maybe 2 or 3 months to recover. Look at the timing on this. Look at that breakout period there. Go out about 24 weeks, get you into February. That would be enough time, even if we just trended mostly sideways like we did here earlier this year, with possibly a pullback, that'll give it a chance to recover and catch up. And if you look at sort of something like this, if we stretch it out, and not so much focused on the price, more so on the time here. But if we go out to that late January, early February timeframe, and let's just say 3,700, which is only less than a 10% move down from here, but at 3,700 level around the February month, here's your February, here's your 3,700. We'll be coming back and we'll be sort of tagging or slightly getting below that 10-month moving average. So that's what the trend really needs to keep this a sustained bull market. But overall, I don't think there's any reason to be concerned from a bull market standpoint. But for those folks that are impatient, you probably have to sit through about 2 or 3 months of consolidation, backfilling, and eventually some type of pullback, I would expect. And the same really goes for silver. If you look at the silver monthly, it's a big move up there. So we hit a high of 54. I think some backfilling is needed. Look at how stretched that became. Here's the 10-month moving average again, back at 37. So in a couple of months' time, that's going to be up around the low 40s. I think we're going to pull back to that point. Is there a chance that this is just a first shakeout and a go? Yeah, there is. And that's why I kind of want to remain overweight from the model portfolio perspective, because this is a secular bull market from what we can see. There are plenty of good narratives out there to support this bull market. And yeah, this could just be a pullback now to this 10-week moving average and then go again. There's still time left in this cycle. By my count, this is only week 10, just looking at the way this consolidated and broke out. So there is certainly the possibility that this sort of has pulled back enough, maybe another week or two, and then go, and before you know it, we're hitting the 4,800 on gold. And I want to be positioned for that. And that's why we remain overweight here on precious metals. And same for the miners. Of course, they're just a proxy. A little bit more of a shakeout here, back already below that 10-week moving average. But it's been a great run, and even more of a pullback is going to be expected. But again, same sort of message with gold and silver. This could just be a first pullback and a continuation, because sentiment has somewhat reset a little bit. Here is silver, here is gold. In a bull market, so it's still elevated, but in the bull market, this could just be the retracement we need, or maybe 2 more weeks lower, back to around that sort of 7-year level on the sentiment indicator, and then go once more. Bull markets do surprise to the upside a lot. I want to remain positioned for this precious metal market. I want to flip over really quickly to Bitcoin, which continues to struggle really. Plenty of very good positive narratives out there for Bitcoin, yet it's hitting lower range, the lower area of this range, where there is some support clearly. It's been showing some resilience in this lower $100,000 to $110,000 level. But of course, the fear is always that the more you hit that support level, eventually you break that support, and then it just drops from that point. I'm more concerned about the equity market topping, and we're going through sort of a sell-off phase that also spills over to Bitcoin and drop below this level. Otherwise, the hope for the bulls remains that we're mirroring the last couple of cycles where they ran around 30 weeks, and that we're just in the final phase of this sort of 30-week cycle down, take out that 200-day moving average, hit a low, and then a continuation. Because when you look at the monthly for Bitcoin, it's still holding its bull market trend, even though it's now showing a 35-month high where the last couple of cycles topped. It still is above the rising 10-month moving average, which is at around about the 200-day moving average, around about the $103,000, $102,000 level. So I think there's room, potentially this candle just opened, so there's room for a little move, a shakeout, one more down, and then continuation of the 4-year cycle. That's the bull hope that we have at this time. I think it's also clear that crude oil made and put in its weekly cycle low a couple of weeks ago, as I had expected. This to me looks like a new cycle that has started, as you can see. I think this is definitely a long, here's the daily cycle, surge out of the daily and also the weekly cycle, pull back to the 10-day, and now I think this should probably follow through with a continuation. I think traders out there can now, with this confirmation of a new daily cycle and very likely a new weekly cycle, could look to enter into some new longs. You've got a good setup right here when you've got some stops right below here, maybe giving it some cushion with a target of potentially up to this sort of $66 range, 3 to 4 risk reward on a new daily cycle, and a new weekly cycle narrative sets up pretty well for a long trade. Global energy ETF is also holding up pretty well out of all this, even though crude has been fairly weak. Energy stocks are still doing well and also throwing off a 4% dividend on something like this. So yeah, it hasn't gone anywhere really in the last couple of years besides throwing off that 4%, but this is setting up well for possibly a continuation. If we can get crude oil prices higher over the next sort of coming 6 months or so, then this could certainly set up for a move above that level. It feels as if maybe it's doing that. but overall happy to hold an energy component that throws off some cash in the model portfolio. The dollar is also showing some pretty good strength right here. I think we have a double bottom right here that marked the weekly cycle low, making this 6 weeks in, now starting week 7, seeing a new high that developed here this week. Of course, that's placing a good amount of pressure on the metals as well. But to me, this probably has a couple more weeks, at least 2 or 3 more weeks higher. The Fed was also a little bit unsure whether more rate cuts were coming. That's adding to this as well, seeing the dollar move higher. I think we're going to see a few more weeks of this, at least up to possibly a left translated cycle. We may even be looking at something that goes a little deeper than that. This feels as if it's bottomed out for now, and that a move back up to maybe the 101 level, maybe 102 is possibly in the cards. You look at the last cycle high on the weekly time frame, up at 102, maybe a double top with that level or a test of that level is in the cards, which is why I think the metals for the next few weeks still have some possible weakness ahead of them. On the daily chart, here's a strong first daily cycle that has developed, and this now confirms a pretty long ending cycle. And now this is the first daily cycle, possibly a cycle low in there, but a good trend higher, making new highs, and probably going to continue that trend in the coming weeks into the end of the year. And then lastly, the commodity tracking index here has a potential here for a big bottom. I think I covered this a few weeks ago, a few months ago, but this is shaping up well. A bit of a surge, breakout there, retest, and now looking pretty good on the monthly as well. Possibly has bottomed out here for the cycle, and looking at a multi-month rise, 3rd, 4th month above that 10-month moving average. Want to get above this sort of 2350 or so level, see a clear breakout, and then that could be off to new highs after that as well. Then lastly here, the allocations, no changes this week. Still fully core allocated, 40% to both tech stocks, S&P 500, underweight on the bonds, which although are looking more likely or more possibly having bottomed themselves, and then overweight to those hedge allocations, Bitcoin, the miners, gold, silver. I still think platinum looks fine, and palladium, although they've come back, and then energy and commodities. With that, wishing you a great week ahead and all the best.